Have you ever wondered how a country abundant in oil could plunge into a severe financial crisis? Well, let's take a journey into the heart of Venezuela's financial turmoil. The roots of the crisis can be traced back to an over-reliance on oil revenues. Venezuela, blessed with one of the world's largest oil reserves, relied heavily on this black gold for its economic stability. In fact, oil accounted for a staggering 95% of Venezuela's export earnings. Now, imagine what happens when the prices of oil take a nosedive on the global stage. Yes, you guessed it right. The economy starts to crumble, and that's exactly what happened in Venezuela. But the dependence on oil wasn't the only cause. Mismanagement of government resources and rampant corruption played a significant role in exacerbating the situation. The wealth generated from oil was not invested in diversifying the economy or in creating a buffer for future economic shocks. Instead, it was used to fund lavish government spending and to maintain a complex system of subsidies and price controls. This led to a severe fiscal deficit and an unsustainable economic model. Corruption, both within the government and the state-owned oil company, further drained the country's resources. Billions of dollars that could have been used for the welfare of the citizens or to strengthen the economy were lost to corruption. The global drop in oil prices was the final nail in the coffin. With its main source of revenue severely depleted, Venezuela was unable to maintain its economic model. The result was hyperinflation, severe shortages of basic goods, and a country on the brink of economic collapse. As you can see, a cocktail of economic mismanagement and external factors set the stage for this unprecedented crisis. But what does a financial crisis mean for the everyday lives of citizens? For those living in Venezuela during the crisis, it meant a drastic upheaval of life as they knew it. Imagine waking up to a world where the money in your wallet is worth significantly less than it was the night before. This is the reality of hyperinflation, a beast that gnawed away at the living standards of Venezuelans. The value of the Venezuelan bolivar dropped so dramatically and so rapidly that people's savings dissolved into thin air. The minimum wage plummeted to a few US dollars a month, and for many, this was barely enough to purchase a carton of eggs. This economic turmoil resulted in widespread food shortages. Imagine walking into a grocery store and finding the shelves bare, not knowing when or where your next meal would come from. It was a grim reality for countless Venezuelans. The crisis didn't stop at empty stomachs. It also emptied pharmacies. Medicine became a scarce commodity, leaving the sick and the vulnerable in a dire situation. Those with chronic diseases found themselves battling not only their illnesses, but also the economic crisis that robbed them of their treatments. And then there was the mass migration. Millions of Venezuelans were forced to leave their homes, their families, their lives behind in search of better prospects. They embarked on perilous journeys, crossing borders on foot, braving harsh conditions and uncertain futures. It was, in essence, one of the largest mass migrations in the history of Latin America. But beyond the physical impacts, the crisis took an emotional toll on the population. The stress of surviving in such conditions, the heartbreak of seeing your homeland crumble, the despair of not knowing when or if things will get better. All these factors contributed to a mental health crisis, the effects of which are still felt today. The human cost of the financial crisis was undoubtedly immense and heart-wrenching. The resilience of the Venezuelan people, however, shines through, reminding us of the indomitable spirit of humanity in the face of adversity. In the face of such a crisis, how did the regulators and the government respond? The Venezuelan government and regulators faced a daunting task. Their response was a series of measures aimed at stabilizing the economy and mitigating the crisis. One of the most drastic steps taken was the devaluation of the local currency. This was intended to make exports cheaper and more competitive on the international market in hopes of stimulating the economy. However, the devaluation also led to skyrocketing inflation rates, reaching unprecedented levels. The cost of living soared, making everyday items unaffordable for many Venezuelans. This led to an increase in poverty and a decline in living standards, exacerbating the human impact of the crisis. In addition to currency devaluation, the government implemented strict price controls on essential goods and services. While this measure was meant to keep basic necessities affordable for the public, it often led to shortages, as producers could not afford to sell goods at the government-set prices. This resulted in long lines at grocery stores and a booming black market where goods were sold at much higher prices. The government also embarked on a series of debt restructuring efforts. These were aimed at managing the country's overwhelming debt burden and preventing a default. However, these efforts were often met with skepticism and resistance from international creditors, further complicating Venezuela's financial situation. The government's response to the crisis was, to put it mildly, a mixed bag. While some measures may have provided temporary relief, they often failed to address the underlying issues plaguing the economy. In many cases, these strategies led to further economic instability and hardship for the Venezuelan people. In conclusion, the regulatory response to the Venezuelan financial crisis was a blend of desperate measures. The government's attempts to stabilize the economy, such as currency devaluation, price controls, and debt restructuring, often had unintended consequences that exacerbated the crisis. These measures, while desperate, often fell short of providing a sustainable solution. A crisis of this magnitude is bound to have political implications. What were they in Venezuela's case? Indeed, the financial crisis in Venezuela didn't stop at the economy. It overflowed into the political arena, causing a ripple effect that would forever alter the country's political landscape. The economic turmoil gave birth to widespread public discontent, leading to an outpour of protests across the country. Citizens, already burdened by the economic downturn, took to the streets to voice their dissatisfaction with the government's handling of the crisis. Political instability became the order of the day. The government's failure to effectively address the crisis led to a loss of public trust. This, coupled with allegations of corruption, further deepened the political divide in the country. The opposition gained traction, capitalizing on the government's perceived incompetence. Political tensions reached a boiling point, with the leadership crisis taking center stage on the international forum. As the crisis deepened, so too did the international community's involvement. International sanctions were imposed on Venezuela, further isolating the country economically. These sanctions, aimed at pressuring the government to change course, only seemed to exacerbate the economic woes of the already struggling nation. In an ironic twist, these sanctions, instead of fostering political change, seemed to strengthen the government's resolve, further entrenching the political divide. The crisis also had a significant impact on Venezuela's foreign relations. Allies became critics, and critics became allies. The global geopolitical landscape was reshaped as nations took sides, further complicating Venezuela's economic recovery. The political fallout from the crisis was far-reaching. It challenged the status quo, reshaped alliances, and altered the political landscape of the country. The effects of the crisis are still felt today, as the country continues to grapple with political instability and economic recovery. The financial crisis, thus, reshaped Venezuela's political landscape in profound ways. Fast forward to 2023. What does the financial landscape in Venezuela look like now? As the echoes of the financial crisis continue to reverberate, Venezuela has seen a concerted push towards economic recovery. The government, along with international bodies, has initiated several programs to rebuild the nation's financial infrastructure. These efforts are primarily focused on stimulating local businesses, encouraging foreign investments, and stabilizing the currency. In terms of economic recovery, Venezuela has taken significant strides. Implementation of progressive fiscal policies and the re-establishment of public trust in financial institutions have played a pivotal role. Moreover, the government has been working tirelessly to create a conducive environment for both local and international businesses to thrive. Foreign investments have started trickling back into the country, albeit cautiously. The government's new policies aimed at safeguarding these investments have been instrumental in this regard. Nevertheless, it is crucial to note that while foreign investments are indeed beneficial, they are not the panacea for all of Venezuela's financial woes. Currency stability has been another critical area of focus. The government has undertaken several measures to stabilize the bolivar, such as stringent monetary policies and the introduction of a new digital currency. These initiatives have brought about a semblance of stability, but there is still a long way to go. In analyzing whether the lessons from the past have been learned, it appears that Venezuela is on the right track. The government's focus on creating a robust and resilient financial system reflects this. However, the journey towards complete recovery will require continuous efforts, vigilance, and the willingness to adapt to changing global financial dynamics. While the road to recovery is long, there are signs of progress and hope. This journey through Venezuela's financial crisis paints a vivid picture of the country's tumultuous past and its ongoing recovery. We've delved into the root causes and triggers of the crisis, seen its human impact, and examined the regulator's response. We've also discussed the political fallout and how it influenced the socio-economic landscape, and given a brief overview of the state of finance in 2023. If you found this content insightful, remember to like, share, and subscribe to our channel for more in-depth analysis on global financial events. Thank you for watching.